First, I want to thank the speakers and the moderator, Shelby, Christensen, Kendrick, Leckband, Canon, Shoults, and Courtney, Danko. Thank you all so much for being part of this. It's going to be an interesting presentation regarding our industrial properties. Quick membership update. Membership goal, we've got this up here. We're targeting 15 new real estate members, and we are pretty well on our way. Encourage everybody to try to bring in principal members. The person that brings in the most members between now and September 30th will have their 2022 membership dues paid for. You can actually find the details on the website. Government affairs, we've got Texas BOMA advocacy coming up on March the 9th and 10th. It's of course virtual, but will still give us some opportunities to visit with our state representatives and senators, as you are in person. And then our signups are still open for that?
I think they can sign up.
Yeah, that's next week. Social activities, we've got Rock the Boat coming up March 25th. I think there's a few spots left available. Check the website for that. Derby Day, excuse me. Derby Day at Lone Star Park is scheduled for April 30th, and that's kind of a new event for us, but that sounds like that's going to be a lot of fun. So everybody needs to get connected with that. I believe that's available to members and non-members as well. And then we've got to save the date for the golf invitational, and that's going to be on May 6th. And so without that, I'd like to welcome Courtney Danko with Holt Lunsford Commercial. Come on up and get the panel discussion started. Thank you.
Okay. Let me just make sure. Shelby, could you guys hear everything that David was saying? Could you guys hear it? Okay. Because with her speaker, it gives feedback on her computer. So I just want to make sure you can hear her. Okay.
Yeah, you can hear. It's a little in and out, but you can hear.
So you're going to have to talk into your computer.
Into the microphone.
I don't know. We're just going to wing it. We're going to try this.
Good afternoon, everyone. I'm Courtney Danko. I'm with Holt Lunsford Commercial, and I'm an active BOMA Fort Worth member, and I currently serve on the BOMA Fort Worth Board of Directors, and I will be your moderator for today's session. Industrial has never been the sexy part of business, but thanks to the pandemic, industrial is now the darling of the commercial real estate market. The outpouring of demand from tenants and the outpouring of capital from around the world has been striking. Today, our speakers will help us get a better understanding of the trends and where this market is going. Our speakers are as follows. Shelby Christensen is Chair and Chief Elected Officer of BOMA International. Shelby has over 25 years industry experience, most recently overseeing 106 million square feet of office and industrial real estate throughout the United States and the United Kingdom. Kendrick Leckband is a member of TA Realty's asset management team. Kendrick has almost 20 years of industry experience and currently oversees the implementation of business plans developed at acquisition, including management, marketing, repositioning, development, and or leasing assets across all firm strategies. Canon Shoults with Holt Lunsford Commercial serves as a managing principal of the Dallas Industrial Division. Canon is responsible for the industrial project leasing and business development in the GSW and South Dallas markets. So let's get started. Shelby, what are you seeing across the market with vacancy rates, absorption, and rental rates?
Well, first of all, let me just say hello to everybody. This is the first time I've been on a panel where it's been part virtual and part in the room, so it's a new experience. I'm totally jealous. I'm in the Philadelphia market, and we still have very tight restrictions. So the fact that you're all gathered together is just wonderful to see, and hopefully we'll get there soon. Thank you for having me. I think as everybody knows, industrial was one of the bright spots in commercial real estate this past year. 2020 was a fantastic year, and I do want to share some of the the statistics, just so you get a sense for it. First of all, Q4 was the strongest quarter on record in the U.S. industrial market, just fantastic. We saw almost 224 million square feet absorbed this past year, which is almost 12% higher than 2019. That's just even hard for me to get my brain around. Construction completions were high, 265 million square feet. That's almost 10% higher than in 2019. Overall vacancy rates were low, under 5%, and asking rents are up, and there was rent growth in the market. So I would say the fundamentals across the U.S. were great, and it was a great place to be in industrial. So that's sort of the broad overview of what I saw.
Perfect, thank you. Kendrick, are you seeing any specific markets reflecting huge vacancy rates? What trends are you seeing in Texas?
Well, kind of to second what Shelby said is, it was a fantastic year nationwide for industrial. We broke records across the board, and DFW was a large beneficiary of that. So we're seeing very strong demand, I feel like, across all markets in the Dallas-Fort Worth area. And we're also seeing a lot of new companies coming that are migrating to Texas, right? So we're the beneficiary of the Californias, some East Coast moves that are looking for our lower cost of labor. They're looking for, just a number of factors that we can provide here that they, are being driven out of their current markets. We're open here. You guys are meeting in person today. So we're really seeing positive trends across the DFW Metroplex and Texas as a whole. I cover product types in Austin as well, and we're seeing, phenomenally really strong, similar characteristics in Austin as we are in Dallas. So I would say overall, very healthy market. Areas where we saw a little bit of weakness, I would say in smaller spaces initially during the pandemic, those maybe more regional type credit tenants, if they were more manufacturing in nature or whatever, we saw, kind of anemic activity in those sizes, as well as those users. And where you really saw acceleration is what Shelby kind of alluded to. It's really kind of that e-commerce trend just continued to accelerate and take off. But across the board, we're seeing, rental rate growth and strengthening in all markets. So hopefully that answered your question.
Yes, ma'am, thank you. Canon, what are you seeing specifically in the DFW market in regards to absorption, rental rates, and vacancy?
Yeah. Well, to echo a couple of bigger picture items that Shelby had mentioned, last year ended up being a great year for the industrial market in DFW as a whole. As we went into the pandemic, there was maybe a month or two where there was some uncertainty. We had some tenants requesting relief, which in actuality, the tenants that actually ended up getting relief ended up being a pretty small number, and everybody managed to survive that time period and pay rent. So pretty quick into the pandemic, we started showing space again. I would say like a month in, things kind of unfroze, so to speak, and we started showing space again. Things got active. So to echo a couple things, Kendrick was also saying a couple of the segments that were remained pretty active last year, basically any deal of size, and by that, quantify that 150,000 square feet and larger, those deals kept on trucking through and made even as in the early stage of the pandemic. We saw a lot of new manufacturing type uses, food related groups was interesting. There was a big demand for cold storage, 3PLs, and specifically related to the 3PL or e-commerce industry. We saw a lot of tenants absorbing space in that segment as well. But so for specific for some of our market, we absorbed about 20 million square feet, which big picture is on par and on track with some of the other years we had. And from a development standpoint, we delivered a little bit over that, so probably about 25 million square feet, and then ended the year with about 25 million square feet under construction. But to sum that all up, We're about 7% from a vacancy standpoint, so still really healthy.
Wonderful, thank you.
You know, I'll just add, I thought this was an interesting statistic, but in 2020, there were over 10 requirements or executed leases over 800,000 square feet and above in DFW.
Yeah.
Wow, that's impressive.
So the really large space is where you really saw a lot of traction in 2020, so.
Right.
Wonderful. Kendrick, what about new construction in the Texas market? And Canon, feel free to pop in on the DFW market regarding new construction.
Sure.
You know, and it's not just Texas, right? Like we're developing all over the country right now, and we're seeing, you know, that there's definitely a lot of new deliveries. So you always want to watch that and balance it with absorption. But what we're finding, and we're expecting the trend to continue through 2021, is the large majority of these new developments are being pre-leased. So they're either pre-leased, and a lot of what we've seen in Dallas too is build-to-suits. So right now, at least for the near term, we're expecting that a lot of the deliveries, although the numbers, you know, look large, that a lot of that's going to get gobbled up.
Right. The thing I was going to add to that, as wide and expansive as the DFW market is, we're coming to a point where land is getting harder and harder to identify and build on. So areas of activity where you're seeing big concentrations of new product would be up in North Fort Worth, and then South Dallas is about to start back up with product again, mainly because logistically speaking, there's great infrastructure for those markets, and then that's also with the availability of land. But as Kendrick said, big picture this year, we may get a little bit out of whack as it relates to deliveries versus absorption, but with the mega deal as quantified by last year with 10 deals of 800,000 square feet or larger, we should get back in check pretty quick, even if that number gets a little bit out of whack.
Thank you. Our next question, Shelby, if you could expand us on a broad scope, what are some of the main changes you've observed in the industrial space as a result of the pandemic?
Yeah, so I'll start with the food industry since Canon mentioned it, and the growth in cold storage. I mean, there's been significant disruption in the food industry, not only restaurants and what's happening there, but also grocery stores. I mean, U.S. consumers are increasingly going for getting groceries delivered to their home. I haven't done it yet, but I have a son in New York, and he and his wife, that's all they do is have everything delivered. But I am seeing, like when I go to the grocery store just to get out of the house, I'll say, when I go to the grocery store, I see a lot of the shoppers that are the grocery store shoppers that are fulfilling orders that have been placed online. So I think we're going to continue to see a growth in e-commerce grocery, which is going to translate to cold storage and, you know, warehouses and things. But another big change I think that's happened is the COVID-19 crisis really showed the fragility in the just-in-time production networks because we had these disruption in the supply chain. You had manufacturing facilities that were closed, ports or borders were closed, and it just became difficult. I mean, how many of you had a hard time finding a Lysol wipe anywhere or toilet paper? I mean, these were very real disruptions that we all sort of felt personally as a consumer. And it's interesting, I saw a statistic that the Institute for Supply Management did with their sort of their constituency about, you know, how many of them had experienced supply chain disruptions. Now, these are business respondents, these are not consumers, but 75% of them said they had experienced a supply chain disruption in 2020, and more than 80% expected that to happen again. So there's going to be a major restructuring of the supply chain process, and we're seeing that play out. You mentioned a lot of the larger spaces that have been leased. I would say we saw that, you know, on a macro level, there were over, according to CBRE, there were over 48 transactions of facilities that were larger than 1 million square feet that were signed, leases signed in 2020. So, you know, this, not only the increase in e-commerce, but the need for safety stock, the rethinking of supply chain, I think that's all going to continue to push demand for industrial in 2021 and going forward.
Kendrick, can you speak to the markets, any market specifically, Texas or any other that you oversee?
Yeah, and you know, it's funny you mentioned, I'll start with cold storage, and then you're going to hear a lot about e-commerce from me and maybe 3PLs. But In terms of the grocery, so I've got a large 3PL grocery tenant in Denver, Colorado, and they were in a mad panic we actually had vacant land next to them. They wanted to acquire us to acquire the land on behalf of them, but we are in the process of doubling their size of their building because they need more immediate. They took on a new client, Sprouts. You know, they do all of Albertson's work, but that is just exploding. And so the demand for that, I think we're going to see that continue. I had a stat that I wanted to add on to Shelby's, in that online grocery sales are expected to grow from 2.5% to 20% by 2025. So that's to approximately 100 billion in online grocery sales. So we're expected to just whoop, right? So, and I'm not surprised by that. I mean, I use that Tom Thumb delivery all the time, and that's direct from their warehouse to your house. There's no going to the grocery store. It's not like an Instacart where you place an order and somebody goes and shops in the store. This is straight from the warehouse. So I expect that trend to continue. Canon helps us. We leased, it was a couple years ago, but we leased one of our warehouses in South Dallas to a food kit company. And obviously in the pandemic, those, have continued to be a growing area where people can have, meal kits delivered to the home, or even pre-made meals delivered to the home. So I expect that to continue. And then the other segment would be definitely e-commerce. So the pandemic really accelerated the e-commerce share of total retail sales. It was 2.5% above pre-pandemic levels. In addition, that dramatic rise in e-commerce shopping has helped to drive e-commerce share of total retail sales. So I love this statistic that we tend to share with our investors. And that is that for every 1 billion of additional e-commerce sales, there is a direct need for an additional 1.25 million of warehouse space. So as you continue to see an acceleration in that e-commerce demand, you can expect a need for probably more development if it's not currently available to gobble up existing space. And then the final thing I'll say is that e-commerce demand was about 12% of total industrial demand for space pre-pandemic, and it went up to 15% during the pandemic. And the new trajectory, it's just showing, so it was, 12%, it's now jumped to 15, and that new trajectory is going to go off 15%. So I think that's going to be really, it was a disruptor already to brick and mortar and everything else, but playing off Shelby's comment just in time and all that, I just think that's where we're headed, and you're going to continue to see demand for warehouse space associated with that.
And I just have one little sort of anecdote to share to that. I've experienced this personally. I mean, I was not a big, online shopper before this. I did some. I swear I'd never buy clothes online, but now I do it all the time. But in my sort of household, and I have 3 adult children, we sort of all share an Amazon Prime account. In 2020, in the first 8 months of the lockdown, we had over 100 Amazon deliveries to our house. 100. I mean, this is crazy. I know I'm not the only one. I'm not an outlier. I think everybody has done more online. It's to Kendrick's point. It's real. It's happening. And by the way, we'll never go back.
I'm guilty.
I know, right? Okay, thank you. Can you please tell me we're not the only one?
Right, exactly. I think everybody would. Canon, do you have anything to add on the DFW market side?
Yeah, sure. I was going to just add in a couple pieces there. So I think the local market is experiencing everything that Shelby had mentioned, just in terms of COVID expediting the need for additional warehouse, large companies rethinking their supply chain, keeping more product on hand. So all of those trickle down. And as crazy as it sounds to say, the pandemic translated really good for our market as a whole, and specifically the DFW. The last piece that I was going to add that's just interesting observation of the market, as Kendrick was talking about the cold storage building, typically those buildings are very specialized, expensive to build. They're either built on a build-to-suit basis or owned by the company that operates them. But as this food industry has, the need for it has increased, we're now seeing a couple developers build that product on a spec basis, which historically is pretty unheard of just because they're specialized buildings. But there's a group in town that's about to break ground on a 300,000 square foot spec facility in South Dallas. Another one that was recently built in South Fort Worth. So not only are you seeing that kind of at the local level, but then bigger institutional funds. So the pension fund advisors, the people that really have the money to invest in these properties, they also have an appetite to own those and invest in them now, which historically wasn't as prevalent.
Thank you. Next question. What are the tenants' needs and how are you adapting to their requests? Canon, we'll start with you in the DFW market.
Yeah, sure. So I think as these tenants have become more sophisticated and denser, from an industrial standpoint, functionality is key and a really key driver in some of these new buildings. So specific things people are looking for would be parking. For instance, an Amazon user, sometimes they will need the whole adjacent acreage and park.
We've lost you, Canon.
We lost everybody?
Trailer parks is another big item, which, can you hear me okay, Courtney?
Where you're coming in and out.
Apparently our
Kendrick,
internet
really?
has been
Shelby,
stable.
did you hear him?
Uh-oh.
Try again.
Okay, I'll
Okay,
keep
we're
talking.
good
Trailer parks is another big item that's key to these big distribution tenants. A new fad that we're seeing is queuing lanes. And so in these next iteration of buildings that are being designed, you're seeing a lot of attention to where you can queue up the trucks and the traffic coming in. So get that off the main freeway or off the main road, and then security. So we're seeing a lot of buildings that if you build them, they have to be secure, single tenant, loop roads around the whole exterior of the building to keep it from interfering with the pedestrian traffic and parking. And then the last item that we're seeing quite a bit as a trend is 100% air conditioned buildings. And honestly, I think that's also a trend related to Amazon. Come summertime, Amazon will advertise on the radio as hiring for temp employees that they can come work in an air conditioned warehouse environment. So I think as there's more warehouse users on the ground, it becomes more competitive to get the labor. Some of these warehouses are really queuing in and trying to keep the quality of labor with a better work environment that's 100% HVAC.
Sense. Kendrick, do you have anything to add, in other markets?
Yeah, well, he touched on kind of my short list, but parking's something that we continue to see that, that's a odd item. And the other is, as a lot of these, whether it's the just-in-time, e-commerce, whatever, they're working 24/7. So we're seeing if we have an older building that doesn't already have energy efficient lighting, so the highest LED spec, the tenants want that as part of their TI, right? They want to keep their energy costs down. So kind of that move to that environmental, energy efficiency is something that landlords are trying to do on a speculative basis. And if it hasn't been done, you're usually seeing the requests now by a lot of these users as part of a TI package.
Great, thank you. Shelby, do you have anything to add on that?
Yeah, I thought about, by the way, I agree with everything that's been said, but I also thought about kind of a different direction. And when I was thinking about some of the things we're seeing are restrictions on access into property. So for a property manager that needs to go into a space and do inspections or make sure the tenant is, take care of the building properly, they're getting very, careful about you. They want to know that your employees, not, answered all the questions, not traveled and they don't have a fever and have they been tested. And I think, one of the things that I hear a lot of companies are grappling with now is, okay, as the vaccine becomes available, are we going to require our employees to take it? Because we are having some tenants that are already asking, are your employees, have they been vaccinated? And I fully expect some tenants to say, I don't want your person, I don't want your engineer, your property manager in my building unless they've been vaccinated. So I think there's a lot of issues that are going to trickle into our space. Like how are we, staying on top of the buildings and making sure everything is being appropriately managed? How do we handle access? The other thing is what I noticed, there was really a differentiation between large users and very small users. Some of the more sort of mom and pop smaller users, they needed information about what was happening at the local level and the state level in terms of restrictions and requirements, things that really are not our responsibility, but they don't know it and understand. And so a lot of times they would look to us or look to the landlord and say, you know, are you doing temperature screening? Am I doing it? How are we thinking about this? So I just, you know, it's been interesting to see the different size tenants, the different issues that they're grappling with.
Thank you. Shelby, we'll start with you again on a broad scope. Which industrial markets saw the most success in 2020? And then we'll go to which one saw it the least, but we'll start with the most.
I mean, there's a lot of ways to think about success. Is it rental rate growth? Is it absorption? You know, what is it? I mean, from an absorption standpoint, of course, the Inland Empire in California always does well. DFW is right there at the top. Atlanta, Chicago, in Pennsylvania, there's this I-78, I-81 corridor. Those are all markets that did well. But also this super regional distribution markets like Chicago, DFW, places that are well positioned because of their central locations to reach the population, right? This makes all the sense in the world because of the growth in e-commerce and increase in online groceries. I mean, if you want to get to the population centers, those all seem to do well. And they weren't only just the big markets. I mean, some of the smaller markets, Savannah, Charleston, and those others did well too. But I'd be interested to hear, I know Kendrick also has sort of a broad perspective. She has a broad view. So which markets, you know, she's heard about. We know Dallas is great, so.
Yes, please, Kendrick. What markets have you heard?
Yeah, I was just glancing at my screen because we have an in-house economist now, and she recently did a presentation on this. And the top markets in 2020 that saw the most demand for industrial, Inland Empire, California, probably no surprise there. And number 2 was DFW.
Hey.
So, yeah. Number 2 is DFW, followed by Phoenix and Atlanta were a close third. So in part, obviously with Inland Empire, that's going to be the strong distribution base, just population alone, right? And supply constraint, et cetera. Whereas Dallas, Phoenix, and Atlanta, those are all cities that have seen this migration trend I talked about earlier, a beneficiary of people moving into the state, right? So, which translated to demand. So that's one trend. And then I also have another slide, and it's the top markets that saw rent growth over 3%. There's over 25 markets on this list, led by Philadelphia, Sacramento, Salt Lake City, Atlanta, some other northern or some Pennsylvania markets, but the list just goes on, and DFW's right up there in kind of the top 10, 15. So, you know, it's a lengthy list of markets that saw over 3% rent growth last year in industrial.
And Kendrick, it's interesting what you mentioned. Those are not all what I would consider to be primary markets. Many of them are secondary markets, right? So we were industrial sort of spread the love, you know, as you got closer to the people, then, you know, you did well.
Right.
Very interesting.
Canon, can you speak to any markets here in DFW specifically, South Dallas, GSW, something like that?
Yeah, so I think across the board, all the sub-markets performed really well. If you kind of break some of that out, South Dallas had lagged behind just because of the amount of new product that was delivered at the end of the last cycle. But over the course of last year, they had a bunch of lease up. There wasn't new product being delivered on the ground, and they dropped to single-digit vacancy rate. I think they got as close to 7% vacancy rate as they've been in years. So South Dallas really pulled through to where it had a higher vacancy rate before. But no, across the board, all of the submarkets performed well in line with some of the things that Kendrick and Shelby are mentioning. So I just think it's interesting if you kind of break down the categories. There's great tenant demand, the institutional capital, there's high demand. Also during last year, we set one of the cap rates, one of the lowest cap rates. So we set a sub-4 cap rate, 3.95 on 2 different deals from an institutional sales standpoint. So I think that just speaks to the demand on the other side with the institutional capital.
Wonderful. Do we have any questions, Michelle, recently, or anybody from the audience by chance?
I don't see anything here.
Just want to make sure.
We're good.
Sure. Has the industrial sector proven to be more or less resilient than expected? Sorry, Shelby, do you have anything to add to that?
Well, I mean, look, I think more resilient, but I do think the pandemic exposed some weak areas, right? We've talked about a lot of these, like the supply chain and the disruption to the supply chain. So now you're going to see people thinking more about onshoring of manufacturing or increasing their inventories. You know, labor definitely was an issue, whether or not people could you know, were they essential personnel? Were they going to work? I mean, I've started seeing significant delays in my Amazon deliveries, you know, so I think that there were some challenges, but I think that the sector moved quickly to adjust and adapt. And if anything, these things have just accelerated the trends that were already happening, the trend toward more e-commerce, digitization, automation, efficiency, you know, resilience, the need for more, you know, additional inventory here in the States. So I think the overall more resilient, but definitely there were some lessons learned, and I think that the industry is responding, and we're gonna thrive. Right.
Kendrick, Canon, do you have anything to add to that?
I mean, definitely more resilient. You know, you just saw it in the numbers that we, you know, given 9 months out of the year, kind of call it was pandemic and downturn. Right. And, you know, the fact that we ended almost, you know, flat in 2020 with 2019, which was a record year just in the DFW area, but then nationally we broke records. So very resilient.
Agreed.
This is more to Kendrick and Canon, but who is driving the market, and how do you position properties to take advantage of the current market?
Yep. Well, we'll go first. Some of it we touched on from a tenant profile. As we said, a ton of e-commerce users, the 3PLs are really gobbling up space, the manufacturing coming back, the food users. So I think we're seeing good demand across all segments. So not only are we seeing pretty healthy demand in some of these larger mega users that we'll call 500,000 square feet and above, the bread and butter of Dallas industrial, which we'll call it 10,000 to 100,000 square feet. For the most part, the local groups are doing really well also, which is the nice thing about the Dallas market in general is from a pure tenant profile and tenant base, we are pretty diversified and have a nice mix of the large corporate groups coming in, 500,000 square feet and above. But we've also got a good stable activity of local and regional companies that really burn and churn and make up a lot of the absorption. And then in terms of accommodating them, Eric had also touched on some of them, but as they come in, as a property owner doing make-readies, updating to the LED lights, you've really seen some tenant demands change in terms of LVT and just a higher spec in office than we've seen historically in the industrial product. So I think people are paying more attention to their make-readies, trying to make things nicer, white box and brighter. And then if you're building a building, that's where it comes into play, where you're really paying attention to your parking, the functionality you're building. 40-foot clear is another big trend right now, that if you're 500,000 square feet or above and catering towards that e-commerce tenant, you really got to think about your clear height and take that into account. So just being more mindful, and especially as we have all these other developments come online, people are really going to key into functionality, because if you're not functional and at the top of the list, your building's going to sit and you essentially have to wait your turn to get leased.
Okay, great. So to each one of you, we'll start with Shelby. Where will the opportunities for the industrial sector lie in 2021 and beyond?
I'll just sort of speak to one, because I'm sure the others have thoughts, but and we haven't touched on this very much, but I think one of the big opportunities is going to be the last mile, the final mile. And I'll share sort of an example with Walmart and Target. I mean, Walmart's grocery app use has increased 460%, 460%. And Target's stats are in the same sort of, ballpark space. Most of the purchases are picked up in the store. And what that's going to do, at least for those two, it's going to lead to a rethinking of the retail space. And there's going to be, maybe an industrial presence in the back, and there's going to be a place for pickup in the front. That, even though that shift is happening, that isn't going to change the need or the demand for that last mile space. But those properties are getting harder and harder to find. And land is almost impossible to find. I mean, I know I'm here very close to New Jersey. We get up to North New Jersey, which really serves the New York area. They will take anything. They will take a 20-foot clear building, and be happy that they're as close to that population as they can get. And they'll pay, a number that, you would think would be an office rent. I mean, it's really kind of crazy. So I think that we're going to see a focus on last mile too, getting close to population centers. And this is going to translate into an opportunity for redevelopment and thinking differently about buildings. Maybe we are going up. And as we have increased automation, we're going to be able to go up even higher. So I think that's one opportunity that we'll see.
Kendrick or Canon, do you have anything to add?
Well, I was going to bring that up as well, because we do own in a number of markets that real, infill products, which tends to also be older construction. A lot of that was like where the first, buildings were developed, and then they, from there, sprawled out. And those buildings have lower clear height. So what I'm actually finding that we've been doing in Southern California, we haven't done it in Dallas, but I think we've looked at it, or maybe we have. But I'm doing it in Denver right now on one of my older, lower clear height buildings, is these tenants, because they are more of a distribution or e-commerce use, but they want to be infill for the last mile. They want to be able to stack as high as possible. So we're upgrading to ESFR on these buildings that were never ESFR before. So, for example, I'm doing it in Denver. It's about $3 a square foot to do it. But you get it paid back. I mean, it definitely, you'll get paid back through the rent and some, but I'm seeing more demand for that on these older buildings with lower clear height, because these tenants want to be able to stack as high as possible, get as much product in there as possible.
Right. The other piece that I was going to touch on related to the infill is that we're getting to a point where you're starting to see in some buildings torn down to come back with new product. And historically, the numbers just have not made sense to do that. But by the time land is harder to find, land is no longer the same value. Land's becoming more expensive. And some of these obsolete buildings that are in great locations, we're right there to where this year you'll see 2 or 3 projects in an infill basis. GSW is one of them. They're going to tear down a building and build back a new 300,000 square foot building that'll be 36 clear ESFR that Kendrick's talking about. So have all these new functionality items that make it much more usable and higher demands for big distribution tenants.
Very good. Any questions from anybody? I think at this time, unless you guys have something to add, that kind of wraps up our session for today. Are there any items that we didn't ask about that you would like to elaborate on a little further? Okay. All right. Well, thank you guys so much for being a part of our session today and enlightening us on the industrial market. We look forward to seeing what the future holds.
All right, sounds good. Thank you, everybody.
Thanks for having us.
Appreciate it.
David, I will turn it back over to you.
All right, excellent program. Thank y'all for being here.